My name is Ishali Mulchandani, founder of IDM Chartered Professional Accountants. Welcome to our Tax Talk series, our weekly episodes of giving you tax tips to make it easy for you guys. So today we're going to talk about use of home as office. It has become even more popular now given the pandemic, but business owners have typically been using their home as office for the longest time, especially when you start out. Even if you have an office outside, sometimes a designated area in your home is used for business purposes. When I say designated, that is the very, very important starting point. To have an area, if you have a den, most people use that, or a room or an area in your basement or wherever that happens to be in your condo, it's a designated area where you keep your desk, you keep your files and everything. That is your little office area. So typically that portion versus the rest of your home is what we call use of home as office for all the different expenses. So if you are renting, then we will take a portion of your rent. But let's say you own the property, then your mortgage interest, not your entire mortgage payment, just your mortgage interest. So I tell the clients that most financial institutions will give you a statement at the end of the year showing what you paid in the year, which is your principal amount, here's your interest amount. Sometimes that includes property tax as well. So we pull those numbers from that, and that's what you will give to your accountant to claim use of home as office: interest, property tax, utilities, minor repairs. I would say you got to be very careful on that one, because only, let's say it's in the area, let's say it's your den and you're just trying to fix something within that's your office, maybe you could claim that. A lot of clients want to get aggressive and claim a portion of the entire home. I would discourage that, only because when you do that, there is a very good possibility when you sell your principal residence that portion of capital gains tax may be disallowed to you. So anything that's capital in nature, you would want to stay away from claiming that in your use of home as office portion. So let's say, for example, you have a 3,000 square foot home and you're using 300 square foot for your office. That's 10%. So when all those expenses are added, then 10% of that, your alarm, for example, you can do that. If you take out a separate entrance just to facilitate this, that could be allowed as well, because now you're trying to make this purely a work area for yourself and for clients to come in and see you. So anyways, talking about mortgage interest, insurance, utilities, property tax, 10% of all of that will be use of home as office that you can claim off against your business. Now, if you are self-employed, then do remember that the use of home as office is a very good expense that you can claim, but it cannot be used to increase your loss. But don't worry, any use of home as office that is not claimed in the year because you're at a it's a wash, it's a break even. Let's say $3,000 is your use of home as office and you have a profit of $2,000. So your use of home as office is more than your net profit. Then you will just only take $2,000 and the next $1,000 will be available for use later on for the following years. So it doesn't get wasted. So if you think that this is especially for you business owners who've just started out and you think that, oh, I didn't make much money, so no point claiming. Don't think that. You can still claim it, and it can be carried forward. If it's not utilized this year, it can be carried forward next year when you are making money in future years. Now, for those of you who have a corporation, you can still claim it. Do understand that your corporation is separate and you're separate. So if you're going to claim use of home as office, it's almost like you're renting your home, that part, to your corporation. So you're collecting rent. So the use of home as office, same $3,000 example, will show as an expense in your corporation. It will also show as an income in your personal return in the rental portion. But then it's essentially a wash. We'll show all those different expenses that we just talked about, the property tax, interest, and so on and so forth. So $3,000 will come as income, $3,000 will go out as an expense. But the main important part is it still gets utilized in your corporation as an expense, as an office expense, because you are using your home as an office. Now, just because you use your home as an office, it doesn't prevent you from having an office outside. People have two offices all the time. So especially in pandemic, when you had an office and you were unable to go and you were using your home as office, you can claim both. It's perfectly okay to do that. Some people still have a landline, you can claim that. Portion of your internet. I would say if your internet is pretty much used only for business, then you can claim it. Not use of home as office as a regular business expense, because if you claim it as use of home as office, then you're only getting 10%, versus if you claim it as a business expense, you get the whole thing as a deduction. Okay. If you have a dedicated landline just for your business, then don't claim it and use of home as office. Again, claim it as a regular business expense to get the 100% deduction. And another perk of having a use of home as office is that once you start to travel from that office to anywhere else, you can write off more travel expenses that way. I talked about travel expense in detail in another episode of mine earlier, but it's as long as you've got all your receipts, so if you ever get challenged, you have them. One thing you do want to remember, if you're HST registered, use of home as office expenses, the HST element is not claimable. So if your accountant is unaware, please do tell them that it's not claimable. I hope you found this useful. Have yourself a wonderful day. Thank you.